Good morning, everyone. Today is Tuesday, January 19th, 2021, and I'm Cordell the Jurassic Waits. We're here to present the battle of the old traditional banking versus fintech companies that's in the market right now, currently. And right now, Wall Street is having a battle between old traditional banking and financial companies that use technology services that acquire customer relations. And just to go over a list of our old traditional banking, there will be your old brick and mortar type of banks, such as JP Morgan, um, Bank of America, even the Wells Fargo's in the cities. And then we also look at the insurance companies such as Progressive, Allstate, etc. And there's credit card companies out there, the Visas, the MasterCards, um, and etc. So when we shift over for fintech, these are more like digital payment services. I'm even going to put in cryptocurrencies into this and even blockchain type of transactional service as well. So companies like PayPal, Square, even Rocket Mortgage that offer technology services to their customers to get insurance, far as mortgage insurance. They use, like I said, technology service versus the old way compared to some of the other insurance companies. But even company like Affirm, who just IPO'd this past week, we've seen what type of pop that it has done in the last 4 or 5 trading days. And currently, while I want to let you guys know that the old payment services that we're used to come are accustomed to may not at the current moment is not working efficiently as it has done in the past. So right now there's a lot of pressure on financial services to perform the same way as your PayPal's or your Squares that's offering transactional services same way without no contact, no form of money having to physically be presented. I do like blockchain investing. I want to let you know that I'm not as much into the Bitcoin transactions. I do believe the banks are trying to adopt it a little bit more, but I just want to give you guys an insight upon what's really going on in the banking and the financial services. Right now, I have a split between a couple different stocks. American Express, they're trying to get more into the cryptocurrency mining um, payment services, but I believe still until they actually acquire more companies and get more customer relations into that area and it becomes more of an adopted Bitcoin blockchain becomes a little bit more adopted, I believe the process has sped up. I talked to an investment banker. They said this process of the coronavirus has sped up online cloud transactional services, which is blockchain, about 3 years. So I do think American Express still fits in that old type of traditional banking, and the other companies I had were rating agencies companies, and we know the Moody's, the S&P Globals. I do think they're such accredited they can adapt to the new ways of how things are being done post COVID, and I look at them as more in that space of game changers, and I will not put them in that old traditional banking type of form. They're close to it, but I believe they're able to switch over because, like I said, they're not a financial, um, a straight up financial. They're more of a rating agency, like I said. So they almost get the pass a little bit. So I won't put them in that old style of banking. And the last one I just felt like was dead in the middle because of everything that they own was Mr. Warren Buffett's Berkshire Hathaway. They do own a lot of stock in individual companies as well as financials and insurance outright, like Geico and stuff. So I believe they're the one that's probably set dead in the middle out of all these ones outside of the rating agencies and American Express. And that's all I had for you guys today. I just want to let you know the difference between old financial services and the way we used to do business versus the new fintech way that the world has now adapted to financial transactional services. I'm Cordell the Drastic Waits. Thank you, and you all have a great day.